Okay, let's dive into this. Because look, if you're a business owner, a bookkeeper, or an accountant using Stripe and QuickBooks Online, you've probably stared at your screen in absolute frustration. You see a Stripe payout sitting right there in your QuickBooks bank feed, but the number just doesn't match your actual Stripe sales for that day. It's like a giant puzzle with missing pieces. Well, in this explainer, we're going to completely demystify this exact problem, show you why it happens, and give you the structural fix to guarantee your books are flawlessly accurate every single time.
Here's our roadmap for this explainer. First, we'll cover the payout problem and the anatomy of a payout. Then, we'll expose the quick add mistake, walk through the clearing account workflow, introduce automation with PayTracker, and wrap things up with some best practices and warnings.
All right, let's jump straight into Section 1, the payout problem.
This exact pain point brings up a completely logical question. Why doesn't the bank deposit match my Stripe sales? I mean, you made a certain amount of money in sales, so you expect to see that exact amount hit your checking account, right? But when the payout finally arrives in your QuickBooks bank feed, the numbers simply do not align. If you don't understand why, it's incredibly easy to panic or just assume something's totally broken. But I assure you, it's not broken. It's actually processing exactly as it was designed to.
To really understand why this happens, we have to look inside the black box. Welcome to Section 2, Anatomy of a Stripe Payout.
To unpack this, we need to understand a core concept known as net settlement. You see, a Stripe payout is almost never your gross sales. Before Stripe ever sends a single dollar to your bank account, they perform a bunch of internal math. They take the customer payments coming in, but then they immediately deduct their processing fees. They subtract any refunds you issued that day, they account for disputes, chargebacks, and any other account adjustments. What is left over, that remaining balance, is the net settlement. And that final, much smaller number is what actually gets deposited into your bank.
And this brilliantly illustrates the real-world math. Let's say you had a fantastic day and generated $10,000 in gross Stripe sales. Awesome, right? But wait, Stripe takes out $300 in processing fees, and let's say you had to process $500 in customer refunds. That's $800 in total deductions. Stripe does that math internally and sends a net payout of exactly $9,200 to your bank.
Now, here is where the real danger lies. If you go into QuickBooks and simply record that $9,200 bank deposit as your sales income, you are entirely breaking your financial reporting. Think about it. You're missing the fact that you actually had $10,000 in gross sales. You're completely hiding the $300 in processing fees, and you're sweeping those $500 in refunds right under the rug. This leads to incredibly inaccurate profit and loss reports.
Which brings us directly to Section 3, the quick add mistake.
When you're staring at your QuickBooks Online bank feed and you see that net deposit, there is a giant tempting button that just says Add. But beware, that is practically a self-destruct button for your books. Clicking it forces you to manually record net deposits as straight income. This can lead to duplicate income if you've already recorded the sales invoices somewhere else. It guarantees missing Stripe fees and hidden refunds like we just talked about. Ultimately, this gives you completely incorrect profit margins and makes your month-end reconciliation an absolute nightmare because your bank statements will never tie back to your actual sales records.
So, how do we fix it? That's where Section 4 comes in, the clearing account workflow. To do this correctly, we need to introduce what's called a Stripe clearing account. Think of this as a temporary bridge or a virtual waiting room, sitting right between Stripe and your actual checking account. By using this bridge, we can safely unpack all the complex moving parts, the sales, the fees, the refunds, before the final net amount crosses over to your real bank account. Let's move to and see how this builds a perfectly balanced set of books in 4 distinct steps. Step 1, all your gross Stripe sales go directly into this clearing account. Step 2, Stripe processing fees are recorded as separate business expenses. Step 3, refunds are recorded distinctly, reducing the balance. And Step 4, the final net payout is recorded simply as a transfer from the Stripe clearing account over to your main checking account. When that final transfer hits your checking account, it will perfectly match the bank feed deposit.
So, the crucial point to remember is this. The Stripe payout is not new income. It is simply a transfer of money from Stripe to the bank. The income was already recognized when the sale occurred in the clearing account. The payout is just moving your money from one pocket to another. This is a fundamental mindset shift that will instantly elevate the accuracy of your bookkeeping.
Now you might be thinking, well, that workflow sounds great, but doing all that manual data entry for every single sale, fee, and refund sounds absolutely exhausting. And you'd be right. That brings us to Section 5, Automating with PayTracker. The good news is you don't have to do this manually.
PayTracker is an integration designed specifically to connect Stripe directly with QuickBooks Online. It automatically handles the exact workflow we just discussed. It syncs the Stripe payments, maps the fees to your expense accounts, processes the refunds, and seamlessly handles the payouts and clearing account transfers. It does all the heavy lifting of unpacking that net settlement for you.
Now, what's really interesting here is how flexible this automation can be based on your specific business model. We've got two main approaches. First is Itemized Sync. This is perfect for SaaS businesses or agencies that need deep transaction-level or customer-level detail right there in QuickBooks. But then we have Summary Sync. If you're a high-volume e-commerce seller with thousands of microtransactions, you really don't want to clutter your QuickBooks with every single $5 sale. Summary Sync rolls those transactions up into a clean, daily summary, while still perfectly accounting for the sales, the fees, the refunds, and that final payout transfer.
Let's move into our final segment. Section 6, Best Practices and Warnings.
Here is the precise functional setup flow you should follow to make sure everything works perfectly. Step 1. Connect Stripe and QuickBooks Online through PayTracker. Step 2. Carefully map your Stripe clearing account, and be sure to map your Stripe fees to a dedicated expense account, something like merchant fees. Step 3, and this is absolutely critical, sync a small test period first. Seriously, do not sync your whole year at once. Review just one payment, one fee, one refund, and one payout to ensure it looks right. And finally, Step 4, go to your QuickBooks bank feed and simply match the payout transfer to the bank deposit.
And just as importantly, here is a crucial checklist of what not to do. Do not go back to your old ways of recording every bank deposit as raw income. Do not ignore your Stripe processing fees. They are a legitimate business deduction and you want credit for them. Do not let refunds hide inside your net deposits or you're going to overstate your revenue. And as I just mentioned, never, ever sync months of historical data without testing a small batch first. You want to make sure your clearing account bridge is working perfectly before you send heavy traffic over it.
So, as we wrap up, I want to leave you with a final provocative question to think about. Are you forcing deposits to match sales, or are you accurately recording the full Stripe flow? Because if your Stripe payout doesn't match QuickBooks, the goal isn't to just force the numbers to align by clicking Add. The goal is clear, accurate, and automated accounting that captures the full journey of your money. By utilizing a clearing account workflow and a tool like PayTracker, you literally transform a monthly reconciliation nightmare into a smooth, seamless system. Thanks for learning with us on this explainer, and we'll catch you next time.